There's an 80-year-old woman sitting in her kitchen right now staring at her bank account, and it's empty. Not struggling, not low, empty. She worked 40 years, saved everything, played by all the rules, and in less than 6 months, it's gone. All of it. Over $100,000, vanished into accounts she'll never see. 2 people she'll never meet, because of a conversation that started with a text message from a stranger who said hello. This isn't one person. This is happening thousands of times a day. And in 2024 alone, older adults in the United States lost an estimated $81.5 billion to financial fraud. Not million, billion, with a B. And the scariest part, most of them never saw it coming. Let's back up. The Federal Trade Commission just released their annual report on fraud targeting people over 60, and the numbers are so big, they almost stop making sense. In 2020, older adults reported losing about $600 million to scams. 4 years later, in 2024, that number jumped to $2.4 billion. That's a 300% increase in 4 years. But here's the thing. Those are just the reported losses. The ones people actually told someone about. The FTC estimates that when you account for all the fraud that goes unreported because of shame, because of confusion, because victims don't even realize they've been scammed, the real number could be as high as $81.5 billion. To put that in perspective, that's more than the entire GDP of countries like Luxembourg or Uruguay. That's not an economic sector. That's an entire shadow economy built on stealing from retirees, and it's accelerating. So what's driving this explosion? It's not that scammers suddenly got smarter, it's that the game changed, the tools changed, and the targets got softer. The single biggest driver of these losses is something the FTC calls large loss incidents. These are cases where one person loses more than $100,000 in a single scam. In 2024, these massive individual losses accounted for 68% of all the money stolen from older adults. Think about that. More than 2/3 of the total isn't coming from thousands of small scams. It's coming from a smaller number of catastrophic hits. People losing everything. Life savings, retirement accounts, home equity, gone. And the fraud type causing the most damage. Investment scams. In 2024 alone, older adults reported losing $744 million to fake investment schemes. Not tech support scams, not lottery scams, not even romance scams. Though those are brutal too. The number one financial predator targeting seniors is fake investments. Here's how it works, and this is where it gets uncomfortable, because it's not flashy, it's not dramatic, it's disturbingly simple. It starts with contact, a message, an email, a text, a friend request on Facebook. Someone reaches out, they're friendly, they're patient, they don't ask for anything at first. This is what investigators call the fattening phase, borrowed from a scam technique known as pig butchering. The scammer builds trust over weeks or even months. They're consistent, they listen. They share details about their own life, or at least a fake version of it. Maybe they say they're a successful investor. Maybe they casually mention how well their cryptocurrency portfolio is doing. Maybe they send screenshots of their gains. All fake, by the way, but convincing. Then comes the pivot. The scammer suggests the victim try investing too, just a little bit at first. They'll even walk them through it, set up an account, show them how to transfer funds. And here's the key. The victim sees returns. The fake platform shows their investment growing. The numbers go up. It feels real. So they invest more and more. Sometimes they pull money from retirement accounts. Sometimes they take out a second mortgage. In one case last year, a widow in San Jose transferred nearly $1 million before realizing something was wrong. And the only reason she figured it out? She asked ChatGPT if the scenario sounded legitimate. The AI told her it matched known scam patterns and urged her to call the police. By then, the money was already overseas. Gone. Now, here's the uncomfortable math. Why are older adults being targeted so aggressively? First, they have money. Or at least, they are perceived to have money, retirement accounts, home equity. Saving scammers aren't chasing broke college students. They're chasing people who've accumulated wealth over a lifetime. Second, they're more isolated. Loneliness is a vulnerability, and scammers exploit it ruthlessly. A widow who recently lost a spouse, a retiree who moved away from family, someone scrolling Facebook late at night looking for connection. These aren't weaknesses, they're human, but they're also openings. Third, older adults are statistically less familiar with the mechanics of modern digital fraud. They grew up in a world where a handshake meant something, where banks were physical buildings you walked into, where investment advice came from someone in a suit you met face to face. The rules have changed, but the instincts haven't. And fourth, they're less likely to report it. According to the FTC, the vast majority of fraud goes unreported because victims feel embarrassed, confused, or scared that family members will question their judgment. Kathy Stokes, who directs fraud prevention programs at AARP, put it bluntly, some people have everything taken from them, and they'll still say the emotional impact is the hardest. It's not just financial, it's identity, it's trust, it's the feeling that you were foolish, even though you weren't. You were targeted by professionals. So where does the money go? This is where the system breaks down completely. Once a victim transfers money, whether it's through a wire transfer, A gift card, cryptocurrency, or a cash deposit at a Bitcoin ATM moves fast. Kathleen Daffin, an assistant director at the FTC's Bureau of Consumer Protection, says scammers act with speed. They get the money and immediately move it elsewhere, often overseas, where U.S. authorities have almost no jurisdiction. You can call your bank. You can call the gift card company. You can ask them to freeze the transaction. But most of the time it doesn't work. The money is already gone. And here's the brutal irony. The financial system that's supposed to protect you, the banks, the brokerages, the regulators, they're playing defense. The scammers are always 3 moves ahead. Some institutions are trying to help. Many now ask account holders to designate a trusted contact, someone the bank can reach out to if they suspect financial exploitation. It's required by FINRA for brokerages, though investors don't have to provide one. There's also a bill pending in Congress called the Financial Exploitation Prevention Act, which would allow financial institutions to delay suspicious transactions if they believe a customer is being scammed. It passed committee in the House. The Senate version is still waiting, but legislation moves slowly. Scammers don't. Let's zoom out for a second, because this isn't just about individual victims, this is systemic. When older adults lose their savings, they don't just lose money, they lose independence. They become financially dependent on family members. They delay medical care, they skip meals, they move in with relatives they don't want to burden. And when you scale that across hundreds of thousands of people, remember, the FTC estimates that 585,000 older adults missed their fraud reports annually, are looking at a public health crisis disguised as a crime wave. But here's what makes this so insidious. The victims are trained not to talk about it. The scammers explicitly tell them, don't tell anyone. This is our secret. Your family won't understand. So by the time someone notices, maybe a son sees his mom acting distant, maybe a daughter notices weird withdrawals on a joint account, it's often too late. The money is gone. The emotional damage is done. Now, let's talk about the methods, because understanding how this happens is the only way to stop it. The #1 contact method for scams, measured by total dollars lost, is social media, Facebook, Instagram, LinkedIn, dating apps, anywhere you can send a message to a stranger. But here's the twist. Phone calls still produce the highest median loss per incident. If a scammer calls you directly, the average reported loss is $2,210. If they contact you on social media, it's $650. Why the difference? Because phone scams tend to involve urgency. The IRS is coming for you. Your grandchild is in jail and needs bail money. Your computer has been hacked and you need to act now. Panic makes people move fast, and fast decisions are bad decisions. Investment scams, on the other hand, are slow. They marinate, they build. That's why the losses are so much larger. You're not panicking, you're being groomed. So what do? How do you protect yourself or someone you care about? First, understand the red flags. If someone contacts you out of nowhere and there's urgency involved, that's a signal. If they're asking you to pay via gift card, cryptocurrency, wire transfer, or cash, that's a signal. If they tell you not to tell anyone, that's a signal. Second, talk about it. Not after the fact. Before, have the awkward conversation with your parents or grandparents. Not in a condescending way. Not like you're lecturing them. Just open the door. Say, hey, did you know scammers are pretending to be investment advisors on Facebook now? It's wild. Make it normal. Third, if you suspect someone is being scammed, don't blame them. AARP specifically recommends approaching victims with empathy, not derision. Shame makes people hide. Empathy makes them talk. And fourth, act fast. If money has been transferred, call the bank. Call the card issuer. Ask for a hold on the transaction. It probably won't work, but sometimes it does. And that sometimes is worth the phone call. Here's the part that doesn't get talked about enough. This crime is invisible. It doesn't show up on the evening news unless the number is truly staggering. It doesn't generate outrage the way a bank robbery does. It's quiet. It's private. It's shameful. But it's also one of the fastest growing crimes in America. Reported losses across all age groups hit $12.8 billion in 2024. The FTC estimates the real number could be as high as $195.9 billion. That's not just money. That's trust. That's the social contract. It's the belief that if you work hard, save responsibly, and follow the rules, you'll be okay. And for hundreds of thousands of older Americans, that contract is being shredded in real time by people they'll never meet, using tools that didn't exist a generation ago. So here's the question nobody wants to answer. If an 80-year-old woman can lose her entire life savings in 6 months without anyone noticing, what does that say about the systems we've built? What does it say about the financial institutions that process these transactions without asking questions? What does it say about the social media platforms that host these scammers? What does it say about a regulatory system that moves at the speed of legislation, while fraud moves at the speed of a text message? And what does it say about us, the people who know this is happening, who see the numbers, who hear the stories, and then move on with our day? Because the $81.5 billion isn't just a number, it's people, it's lifetimes, and it's happening right now.